Thank you for joining us, Colin. Since Marikana, would you agree not much has changed? We still seem to have these divisions between business and labour, and business and government, and labour and government.
Well, there have been attempts, as you know, led by Deputy President Kgalema Motlanthe, by the government to intervene, to work alongside business and labour to try and come to terms. But the underlying structure and architecture of the situation has not changed. Neither the conditions underlying the workers and the business experience, nor has the overall legislative framework of labour changed. So we are dealing with something that's ongoing, and obviously from an investment perspective, very concerning. So we've seen a fall off in mining stocks in general, and platinum and gold in particular. And these companies are trading at very low multiples in terms of valuation historically. And it's very important for the country that the mining sector stabilizes, that labor stabilizes, because mining is a very, very significant contributor to exports, which impacts our current account deficit, in turn the value of our currency. And if the value of the currency is the share price of the country, together with a credit rating, the mining sector occupies a very important place. It also has a multiplier effect on jobs in the manufacturing sector. They say 10 for 1 manufacturing jobs in mining, and obviously the repatriation of income to the families of workers is very critical. So all of this has been massively disrupted by the situation and needs to be urgently addressed.
There is this McCobb irony that the platinum miners went in with these supplies. We know that they've still been able to sell on the global market, and it's almost correcting a situation of close to an oversupply of platinum. Today, platinum reaching a 2-month high. But you're saying investors aren't looking at that, the possible short-term gains for these platinum miners. They're looking at the industry as a whole and what's going to happen in the future.
I think they'll look at supply and demand, but they'll also look at the country perspective, the commodity perspective. It depends on the type of investor. You obviously have commodity-based investors, you have people more geared towards the emerging market world, and then you have obviously those who are PGM, what we call PGM, platinum, gold, metal investors, and they will play this differently.
So we always hear the threat, Colin, that investors will leave, and now I'm talking more about foreign direct investment, which is perhaps more important than those movements on the stock markets. Is there any way we can gauge if there's been an effect since Marikana? Our government often saying, look, there are people still coming in.
Well, there has clearly been in the platinum and gold sector a fall off in valuations. In other words, there are few people buying than there are selling. And at these valuations, one would expect not portfolio investors, but foreign direct investors to have a look at the value of these companies from a buying in perspective. But as far as we can see, there's been no action to date in that respect.
That's what I was going to say. So it's not the threat. You're not hearing on the ground that we're actually avoiding South Africa because of what we're seeing.
Well, if we move away from the platinum sector specifically, I think the benefit of the election is that with the mandate that's clearly there for the African National Congress to resume office after the 24th of May inauguration, is going to clear the field, so to speak, for investors to look afresh at South Africa. And they will look very carefully at the makeup of the new administration, and in particular what generals are appointed into the cabinet by President Zuma, and also the foot soldiers of the National Development Plan and the policies of the government. How quickly and how effectively will the government get going in the 5th administration in putting in place the policy measures? This is what will give people renewed confidence or send a signal of concern, depending on the makeup of the cabinet, depending on the signals that are sent about the administration. So far, what we've heard from President Zuma in his acceptance speech at the ANC headquarters last weekend seemed to indicate a business-friendly national development plan, confident plan, and we hope to see that implemented with vigor.
Ben Turek, the ANC's Ben Turek, saying today, I can't find the exact words, but basically that the National Development Plan isn't much of a plan. He said that government's indecisiveness has allowed Julius Malema's EFF to gain massive support. So there is criticism of that plan, that it's not firm enough, it's not clear enough, it's just a general outlay of our problems.
Well, I would say there are different perspectives on plans, but let's put it this way. The plan has been adopted by the Cabinet. It is the ANC's plan in terms of the election manifesto, and it was elected by 62% of the people on that basis. This is a clear mandate to implement it. I would describe the general situation as one where policy is not new policy is not required. It's institutional effectiveness, implementation, and execution. And this is why the appointment of the people is so important. And what's happening in this interim phase up to the 24th of May is so important, that we get the right people, the right talent mobilized behind implementation. With that, getting Eskom to build the power plants on time, getting Transnet to get the ports to deliver coal to our export markets, getting the quality of spend in education and health to be improved, because we've really transformed the quantity of spend. Just remember, in 1990, we had 30% of our budget going to debt service and to defense. That's now 12%, and 60% of a tripled dollarized budget expenditure is now going to education, health, housing, social welfare, and so on. So investing in people. This is a dramatic improvement in the quality of spend, in the quantity of spend. We now need to see a dramatic improvement in the quality of spend.
I guess what I'm hearing from you is what I hear more and more often, that it's not any longer about the size of the state, whether we need a bigger state, more intervention, less intervention. It's about the capacity and the strength of that state to do what it needs to do. Are there concerns that South Africa is weak? We don't have those skilled administrators to enforce policy.
Well, I think one of the things of the National Development Plan, and generally speaking, I think it's accepted in the ruling party, is that they need to be much better. There needs to be a much more improved capacity of the state and credibility of the state, and they need to implement. So I think that's going to be the hallmark, hopefully, of President Zuma's second administration, is that in 5 years he can look back and say, you know what, the second administration that he governed was qualitatively a much better and more efficient administration.
Very quickly, would you advise overseas investors to invest in South Africa right now?
Well, South Africa has many things going for it. So the short answer is absolutely. The key is that we have a very deep and liquid capital market. So investors can come in and get out with ease, which is very distinguishing in Africa. We have 10 times the largest stock exchange and 100 times the most liquidity. And so it provides easy access for investors to do that. The key question is how not so much portfolio investors, but foreign direct investors are going to develop over the next period. We'd love to see foreign direct investment going from an average $2 billion in the last 20 years to $5 to $10 billion per year in the next 20.
All right, thank you so much for your time this evening.
Pleasure.
That was Colin Coleman, Local Managing Director at Goldman Sachs.